Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of June 8th. This is Thursday, 2023. Sorry I couldn't make it last night. I had a family emergency come up right when I was going to do all these. By the time it ended, it was just too late and didn't want to do it. It was a good couple hours later than it should have been. Apologize for it, but life comes. These are free. I don't miss my subscriber videos. I even do them often on vacation. All right, that's the paid subscriber. And by the way, that brings me to the point. You know, if you look here, if you're watching me on YouTube, it says the blue button. If you click there, you can join us in the mornings. Do it. And if you like these, please give me a thumbs up. Okay, so today was all about a surprise that we saw initial claims jump up for unemployment. And on those claims, it was a bigger number than the market thought by quite a bit. Is it noise in the market? Don't know. If you'll recall, as we were getting drops, we kept hearing, no, there was a fraud in Maryland and that's being taken care of and it's got to work itself through the system. Is this a real number? It might be. So if it is, does that tip the Fed this coming Wednesday to saying, hey, we're going to go into a pause. We're getting a little bit of a break in that we are seeing unemployment claims jump. Countering it, if I'm at the other side and I'm a hawk in that room, I'm going, yeah, but the continuing claims fell 37,000. It offset the initial claims by more. What's that about? So it's a wobble. And in these wobbles, that's the problem. Do you go one way or the other? Here's what you learned, and you learned a lot today. You learned that if the Fed goes into a pause, the dollar goes down, fell pretty hard, 73 points. Yields probably go nowhere. In fact, I could make an argument that if we go into a pause, the 210 starts going the other way, back towards the idea of flattening. Why not? The stock market went into euphoria mode and came off a good early morning break and turned around. There's one other event, and in oil, there was a rumor, and it dropped oil prices near 4%. That's a heck of a drop. The rumor is that the U.S. and Iran are close to a deal to end the nuclear drama that the two have been in, which would free oil up onto the market. Oil fell 4%. The White House quickly denied this was taking place. They didn't wait around on that. It was very fast. Yet, you only gained back about half of what you lost. You still settled negative and you're here. So somebody somewhere thinks, nah, that's not quite right. I suspect the problem. All right. If we take a look at gold, you can see that the market had gone down, challenged a week ago. The 18-week average of closes didn't quite hit it, but it made its run to it. And you're up about a half a percentage point for the week. When we take a look at the daily bar, if you take a look at this action, you're still in a downtrend, even with the bounce. Lower highs, lower lows. You literally, the whole key to this market, as I'm reading it, is you got to get back over 1986 and a half. You have to close over the 18-day average. And then I can start making the argument that we have bottomed out until this low right here, yesterday's low, is taken out. That would be my argument on that. Where might the market go? Well, wherever the Bollinger Band comes in, but I don't think it's going to be far away. This number's dropping very fast, so I think the market's going to sit here, play a game, and wait to see the Fed numbers. So is it going to be out of the downtrend before then is the big question, and what would take that out is 1986 and a half, and as you can see, momentum's trying to come up, but it hasn't convinced me it's up yet. The silver, gold, I made a mention to you as soon as you got back under it. I said, now you want to be thinking long silver against gold. And tell me that that hasn't worked out. Look at how silver right up to the Bollinger Band. I want you to look at these moves to the Bollinger Bands, the importance, how they often put the market back and they take out the air out of the sail. At the end of this video, I'll be showing you the Bollinger Bands, how to work with them, how to learn from them, everything of that nature. Learn. That you're your own best weapon in trading. When you look at the copper market, there's rumors that China's going to do something, circulating in the market to help the economy. Now, today they formally cut time deposits and all kinds of rates that you would get if you have your money in the bank but not by very much. 5 to 15 basis points in certain areas. That's not enough to get the public spending. There was talk of this 48 hours ago, and the market started lifting, and it still is. You're at a key resistance area, the 200-day average in the upper band, and you're overbought. Unless they actually announce a program, you're at an area that the market's setting itself up for big resistance and probably not much upside. In the platinum, this market took me to the cleaner this week. I thought back here it was going to fail. It got a rally, and now it's completely broken down again. So it waited for me, knocked me out of positions. I'm just like everybody else. It does happen, and boom. In fact, so far this month, I wish I hadn't woken up any day. It's not been a good trading month so far. In the dollar index, I'm back in a downtrend, or at least the chart is. Lower highs, lower lows, momentum down. So until you get back up over 4 days ago, the 104.36, a top is in place on the daily charts, looking for the potential back to the 102.60, 70 area, right in that general zone. You put it together, you come up with the game plan, and that's what it's about. But you're noticing these Bollinger Bands are stopping the rallies right now. And they held the brakes. That's important. Why? How do you work with them? Well, my advice is that you sit back and you learn. Now, I'm going to show one other part before I go there. Here were the claims numbers, up 28,000, but look, you lost a jobless of 37. So as I said, learn right now from the Bollinger Bands. Take a look at this. I'm Ira Epstein, and when you watch it, just move your cursor to the top. You're able to get right into everything you need during it playing. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.